Hello everyone and welcome to our new video analysis. This will be a free edition, so if you're watching this on YouTube channel, just make sure that if you want more updates, more intraday updates, check our services. We have a trial available for new members. So what we will be talking about, well, I will walk you through some of the important markets just to give you an idea where I think that markets are currently trading and what may happen maybe at the start or the start of 2023, maybe already later this year. Okay, so as you know, stocks are in risk-off mode. We have seen a breakdown on DAX last week. There is still a chance for a potential breakdown to happen on the S&P 500 this week. We are trading very close on those US indexes, close to June lows. So I think that that there are plenty of stops below that level, and that markets will become even more bearish and more pessimistic if or when we will break those lows. However, puts raised to highest in just one day, so it looks like there are a lot of traders, investors, speculators that want to protect themselves from falling prices. And whenever we see this moving into the extreme, well, we know that maybe this current cycle is coming to an end. But unfortunately, I think that we are not there yet. Central banks are still hawkish, very hawkish. I believe that the Fed will look for rates around 4%. There is a 10-year US yields that is also pointing towards the 4%. So maybe we are in a late stages of the current cycle, but we are still not there yet. So as long as those hawkish cycles are going to be in place by central banks, this of course means that stocks could continue much lower, especially when you have this economic data coming out very bad day after day. And as you know, bad economic data and hawkish Fed, well, normally that's not a good idea. So it's not good for stocks, and that's why stocks are turning lower. And now if we take a look here on the S&P 500, to give you the perspective what I'm looking at, well, you can clearly see that we are trading much lower after we posted actually some video updates about this trend line that reacted firstly as a support but then was broken decisively, and looks like that we are now headed lower into wave C. Notice that VIX non-sphere index is now trying to pick up here, so we are moving into some upper side of this range, and once we will reach these extremes, it means that fear will be at the extremes, and normally that's when I would be expecting the opposite from the market. Something similar like we have seen back here in that was back here in February, even here in January, then again in May and June. So maybe something similar will be seen maybe in October. So we'll see how this will unfold, but before we may see some stabilization after this wave C, well, wave C is a motive wave, so it should be made by 5 subwaves. And if you look closely here, well, that's still not a 5 subwaves down from end of a wave B. So we either stay sideways here in the choppy range, or ideally will continue to weaken into this wave C, and then maybe later this year we may see stocks trading at the support. And now let's take a look also on DAX. Now DAX is also coming to the downside. We are seeing a very nice and important break of that trend line. We are already at a new low, so we can say that wave B is finished. Now looking at some projections here from what I took the wave A distance and projected it from end of this subwave A, which was the widest lag, because I also think that there is a chance that this was wave B. So I'm looking for this minimum downside projection, let's say around 11,000, not minimum, that would be ideal target down there. Also, you can take the distance then of this widest lag as well. Okay, and you can project it here from end of a wave E of a triangle, and you will also get these levels around 11,000. So I think that this is quite important level. More importantly, we are in a wave C, maybe final stages of a higher degree correction. So even if things are obviously not looking good, there's still room for more weakness. But I think that whenever we will see prices reaching 11,000 area, that was also, by the way, the swing back from 2000 and 20. So whenever we reach these levels, I think that there can be some stabilizations on this market. But for now, as I said, we are still in the risk-off mode, and there is room for more weakness in the near term. Now, looking at dollar Chinese yuan, this one is also very important, especially if you're maybe trading metals, and obviously for the whole global economy. And even this one is looking like it want to take out this 2019-2020 highs. So again, I think that whenever this will happen, we will move into some late stages of this recovery, and I would not be surprised if at some point later this year, maybe at start of the next year, we could see end of these trends. Now, also another important market is the 10-year US yields, of course. I'm looking at the US yields here. I see prices rising into a fifth wave, so maybe we are in the late stages of this current cycle. Maybe the speculators will bet that sooner or later, if we'll see a reversal on the futures contract, that sooner or later maybe the Fed is coming into the late stages of their hikes, and maybe they will have to accept that recession is here. Maybe this is something that will hold them back from raising too much, and if that would be the case, of course, I would not be surprised to see this market coming lower, or at least stopped for now, because after all, we can count 5 waves up. There is still fib levels around 4%. I think that this is a very big level, and I'm very curious to see what will happen once we reach these levels, if maybe stocks will be trying to complete that wave C. At the same time, maybe wave 5 will also move into that resistance up there. That would be quite nice. Now, let's take a look also on the euro dollar. So now there's still a main problem is the inflation and energy crisis. However, the energies, commodities, natural gas, and so on, the prices come down a little bit, but each time you just hear about higher prices. But if you look at the charts, you will actually see that a lot of commodities came to the downside, including crude oil. So we'll see how will this have an impact. I just think that price at some point will stabilize. And even euro dollar, I think that will potentially stabilize. We are seeing prices moving into the multi-year important support levels. If you look here back from 80s, that was actually not the euro back then, but it was recalculated with the old currency in Germany back then. So you can see that there's still a multi-year potential support, especially if you look at this latest intervention from the ECB that occurred in 2000. So back then it was a massive support for the euro dollar, and maybe something similar could occur here. Of course, stronger euro would be helpful for inflation to calm down, but ECB unfortunately will have to be much aggressive and very hawkish with their rate policy to make the euro stronger. Now let's take a look also on pound. So as you know, cable is breaking down sharply. It fell a lot since Friday actually, and actually cable came down hard after British Finance Minister announced tax cuts on energy. So actually the goal is to support their economy for households to save more money, so that they will be able to spend more on some other stuff. So on the longer term, that's somehow, at least that's why they're thinking that this will have a positive impact on their economy. But for now, speculators, however, did not like this. They are quite pessimistic. But looking at the big time frames, well, keep in mind that we are moving into this 1985 potential big support level. So we'll see how the market will respond down here in the next few days. There will be comments releasing from Bank of England. There is also speculation for very hawkish Bank of England policy decision by November for 2% rate, higher rate. So we'll see if this could stabilize the pair here, or here also the intervention. Who knows, maybe they will mention this as well. And from a pure Elliott wave perspective, well, that was a very big ABC recovery, and now you are moving to the downside with 5 waves within a potential throw over in these late stages of a wedge pattern. So we will see how this will respond down here, but definitely when things look very bad, that's usually when the opposite occurs, okay, and the majority of growth is surprised. So we'll see how the market will unfold here. Of course, this is a very bearish trend, especially on the intraday basis, but just looking at the big perspective, I think that maybe later this year or maybe in 2023 things will look completely different than now, okay. Also, let's take a look also quickly here on Euro Yen. As you know, Bank of Japan made an intervention last week. We have seen Japanese yen strengthening across the board, but then you still have their easing policy. So there are two contrarian policies which maybe could leave dollar yen in some very choppy price action. However, looking at the euro yen, I'm waiting on a potential top formation here. It's not really the case yet, because if you look closely here on the intraday chart, well, I still maybe cannot count these 5 waves to the downside. But for any top in place or low in place, you want to see either 5 waves up from a new high, or for a low, obviously 5 wave rise from a new low. So that's not the case yet on euro yen. I still can count only waves 1, 2, 3. So if this pair will make a top, then this current bounce should prove to be a wave 4, and then watch out for a wave 5. Okay, so if that will unfold, then I think that there can be some very nice chances on the way down, because obviously then we would also have this broken trend line, and I think that pullbacks could then be very interesting here for shorts on the euro yen. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video. So again, if you're new to our website, if you're new to YouTube channel, make sure to check our trial offer. Have a good day. Bye.